Hey everyone, it's Mike from Orderflows, and in this video I'm going to be talking about the Orderflows Turns, how to use order flow to find market turning points. And I'm going to show you charts from last week, September 24th through September 28th, 2018 in various markets, in various time frames, and I'm going to go over some of the settings of this indicator. Now before I begin, a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. All right, so what is the order flows turns? Well, it's a tool that analyzes the order flow in a bar to generate potential market turning points. Areas in the market where prices are being supported or defended. And what it looks at is it looks at order flow and it looks at technical analysis. Well, I'll say technical analysis, more swing analysis and price action. So what it covers is delta, point of control, overall volume in the bar. It compares volume traded on the bid against the ask, price action, and swing analysis. So in this presentation, I don't want to make it too long, but I'll be covering several markets in several different time frames or chart types. I'm going to cover bunds, euro currency, E-minis on a 4 range, on a 1 minute, and an 8 range. I don't want to be covering too many markets because it'll just this video will just go on and on. But earlier this week on the last Monday and Tuesday, I sent out emails with bunds and euro currency, and over the weekend I sent out another email showing you how it performed, how it followed up on the rest of the week, and I'm going to cover that really briefly here. But I'll also show you the E-minis on different range-based charts, a 4 range and an 8 range, as well as a 1 minute chart, and I'll also talk about the settings. So first we'll take a look at the bunds. So this is the settings that I have for the bunds, and I'll be honest with you, majority of the settings are all the same for all the markets. You'll see we got short, look back filter on, signal threshold 0.3, volume at 0. And the two things that I think that, the one thing that I get a lot of questions on is what's the difference between duration. There's actually a short duration and a long duration. And a short duration would be if you're looking at something like, say, a 4 range chart or a 1 minute chart, I would consider that a short duration chart. If you're looking at, say, a 5 minute chart or an 8 range chart, I would consider that long duration. And what it does is it differentiates the type of charts. Because again, when you're dealing with volume, I don't think you can compare a 4 range chart in terms of an 8 range chart on the same, because one is it's a shorter time frame. Just as if you're looking at a 30-second chart, you're not going to analyze the data the same way you would analyze a 5 minute chart. It's sort of different time frames. So if it's shorter duration would be things like a 4 range chart or a 1 minute chart or less, and a longer duration, be 5 minute chart or a bar chart, or sorry, a range chart that has more than 8 price levels or more. So that's the difference in there. And the other difference, again, they're all pretty much the same. So the only one that differs on that shorter, longer duration is going to be the 8 range chart, which I've changed to long. You can see there. Also here on the euro currency, it's set to long. But the 4 range, it's all short. The 1 minute chart is short. They all got the same signal threshold 0.3. Look back period is, so you can see here, the signal threshold 0.3, boom, 0.3, boom, 0.3, boom, 0.3, boom, 0.3, boom. And the look back period, they're all set at 7, 7, 7, 7, except the euro currency, which is set to 2 because it's a bit more volatile. And when I say volatile, you get more price movements during the day on an 8 range euro currency chart than you do on a say a euro E-mini or a bund chart. But again, I could set that to 7 if I wanted to, but I set it to 2. I prefer 2. I want a few more signals than less, because I'm trying to get more. It's going to give you more signals, but it's also at the same time, opens up the door to more losing trades, but at the same time, it opens up me to more trading opportunities. That's why it's set to 7. And the signal threshold, everything is set to 0.3 here, 0.3, 0.3, 0.3, 0.3. If you set it to say 0.4, it's going to be stronger. You're going to get less trades. If you set it to 0.2, it's going to be a little bit, I'll say weaker, but less. Again, it's what it's doing is it's analyzing volume and order flow. So if you set it to a lower number, it's going to give you more signals. It's letting more trades in. You can set it to 0.10, even 0.1 rather, which would be 10%. So let's take a look here at the bunds. We'll start with the bunds here. Give me a sec, get my bund chart up here. So again, going back to Monday. Now I sent Monday and Tuesday out on email, but you can see here this red area. This is not red, it's more of a fuchsia, magenta. It would be selling areas. Buying areas are down here in the blue. And it signals at the top of the bar. Again, you could adjust it if you want that, or if you just want an arrow. I sometimes I need something a little bit big to slam in my face. You got that sell right up here off the open. Excuse me. Sorry for that. So you got this about 1:30 in the morning. This is set to Chicago time. So you got that nice sell. Got a buy signal here, rallied up, then sort of got a sell. It just went sideways. Probably would have stopped you out. Then you had that nice sell off, and then it just comes back into this area where you're trading back and forth. You got a sell area in here, followed by a buy area in there, some price support. Market rallied. Then you come down in here. Again, market just went sideways to lower before it rallied back up. Then you got these, or it just went sideways afterwards. It didn't really rally, but didn't sell off. Then the market closed next day, the 25th. You got this nice sell signal here, followed by this nice buy signal on the low. You got this selling area up in here. We sold off a little bit, about 10 ticks. Before you came back up. This buy failed here. You got a couple of small sells here, followed by this buy right here. Rallied up into the sell that failed. Then you got another buying signal here, another buying opportunity. Oh, this is the next day already, actually. So this was the end of the 25th. And then on the 26th, you see, got this nice buy here, rallies up. I'm gonna say rallies, but it's moving higher, but sideways but higher. Comes down, actually tests that low that you made earlier in this bar. It was a Fed day that day, I believe, on Wednesday. You got this nice buying opportunity here, and market rallied. Then going into the 27th, this buy that failed immediately. The sell, again, we came back up, tested these highs here, and then started moving a little bit lower. Then rallied back up again. This selling opportunity failed. Again, I want you to see the ones where they failed. It started to work out, turn around, would have stopped you out. Then you come down into this buying area, nice buying area down in here, and then you rally up about 15 ticks there. Another buying area down in here. Again, you rally up about 15 ticks there. Same thing here, coming down into this area of support, price support down here. I mean, you could sort of just draw this box out a little bit further if you wanted to, and you can see how it's holding. Then boom, nice rally going into the close of the day. Then on the 28th, on Friday, what happens? You get this nice buying right after the open, and what happens is it fails. But then about 30 minutes later, you get a nice area up in here of selling area, price resistance up here, price defense. What happens is the market sells off quite nicely to an area of support, rallies back up to an area of intermediate defense, intermediate resistance, sells off. This one fails. I mean, look at this day. So you had one that failed. Okay, stopped out, but you got a nice tight stop. 4 or 5 ticks from where you're getting in. Then you get a nice move here from 72 all the way down to 40s. Then you get another buying opportunity right down here in the 40s, mid 40s, rally up into the mid 60s. Got a sell signal from the mid 60s all the way back down into the 40s, rally back up in here. So I mean, these are 20 tick moves here, and look at what's your risk? You're risking maybe 5 or 6 ticks. Getting short here, it stops you out. Okay, but you just had a 20 tick winner and another 20 tick winner and another 20 tick winner. Then you come in here later in the day, 4 in the morning, just before 5. Again, you get another buying opportunity, and what happens? Market moves from 158.90 all the way up to you know, 159.20, and then you sell off some more. Hit this area, rallies up a little bit. You hit this area, rally up a little bit, and I think you had one more signal here. This one didn't work out there. And you end up the day with that. But I mean, again, you know, are you willing to take, you know, this trade here and this trade here to get stopped out on, you know, this trade here? You know, like even these two little ones here, you could have got something out of. You know, you rally up to where an area where you know you got price resistance with the prominent point of control, this purple area in here, and that point of control, this purple area. So, you know, it's a nice little tool. So that's the settings that I'm using with this bund 4 range chart. Again, there's not much variation. Now let's take a look at the euro currency on the 8 range chart. And on the 8 range chart, I said the only thing different I use, obviously, I changed the duration to long because it's an 8 range chart, it's a longer bar. Look back period, I changed to 2, and there's a reason for that. It's because it moves around a bit more. So where am I here? This is the euro currency, the 8 range chart. It starts on the 26th. I'll just take it back here a few more days for you. Started on Sunday night. That way, you know, you can see it for the entire week. I think it's just better for you to see the whole week rather than just say, well, you know, he's only showing me the times it worked. No, I want you to see the times it works, the times it doesn't work. So you see this is 25th. So here, this is starting on the 24th right here. You can see there. Gives you something else, nice low here, rallies up this area, comes off, comes up to this area, sells off, rallies back up. You got this selling area up in here, buying area down in here. You can see these little sells. This one fails. This one, you got some buys. Small move here. You know, just, you know, range trading, but it's giving you the sell, the buy, the sell. And then you close next day. Asian session opens up. You got a couple buying opportunities, and you got this nice sell. You know, these two just sort of go sideways on you. Then you got a nice sell here. This one fails. You know, this one I think would have stopped me out because, you know, we just poked through there, made that new low. You know, it sucks, but that happens. You got to move on to the next trade. You know, you start moving down, just then go sideways. You know, this one, yeah, same thing. You know, it just comes down, stops you out. This one doesn't stop you out. Then you get that little poke higher. I would have liked to see it take out this high on this move. It didn't. You sort of got this little head and shoulders there. Then you come down here, you got a nice buy. Rally up this area, we got a nice sell. And you just go sideways in here. Stop the second one. This buy would have stopped you out. This one right on the futures close. On the futures close. Right before that. Then you're coming into the 27th. Now, you know, we spent a lot of time going sideways in here. This one failed. You know, this buy failed. The sell, I'd put it up as maybe you could scratch that, or, you know, maybe even take the loss. This one got stopped out on, but then boom, got a nice trade here. Another nice trade here. Debatable if you would have been stopped out on this one. You know, this one probably would have been stopped out. Then you got a nice move here. You got a little move here. Here probably would have been stopped out. These two stopped out. Stopped out. This one you could have got something out of, hopefully, before it came up there. This buy could have got something out of. This sell you could have got something out of. Then coming into Friday, now this one failed. You got something here, stop out, something here, something here, something here, something here. This one probably would have stopped you out. These two stopped you out. This one stopped you. And then going into Friday afternoon, just before the futures close, you got a sell signal. But again, I wouldn't take that and hold it through the weekend. So that's you know, that's something I didn't mention before. This indicator will work on a bar chart as well as a candlestick chart as well as a footprint chart. So let's go take a look at. Sorry, that was the euro currency 8 range. So let's take a look at the E-minis on the 4 range chart. Again, short. I use a look back 7, signal threshold of 0.3. Go to my 4 range chart here. This is going to be a footprint chart here. Here you go, footprint E-minis 4 range. Just go back here to make sure I got the right day here. 24th. Okay, so Sunday night on the reopen, boom, within the first 30 seconds you got a buy that failed. Then, you know, after it settles down about 10 after 5, you got a nice buy here, you got a nice sell there. Nice sell here. It works out. This buy would have stopped you out. You know, this buy here didn't work out. This buy, you know, again, if you're trying to get a point out of the market, there you got your point. This one didn't work out. Again, you got your point there. This one didn't work out. Again, you could have got something out of this trade here. Got something out of this trade. This one just sort of went sideways on you. Could have got something out of that trade. Got something here. Definitely got something here. I mean, you know, this is a 4-range chart. I mean, you know, you're talking a move from 29.22.5 down to 19. Again, got something here. Again, look at this move from 29.25.5, you know, down to 29.21. You know, it's 4 points. That's the low of the day right there. Again, another nice little move here. This one didn't work. Then you could have got something here. You know, you're talking not 1 point or one tick. You're talking, you know, from 35 down into the, you know, 32 area. This buy doesn't work out. Then you get another buy down here. Look at this. You know, again, from the 25 area all the way up to 29 area. This buy fails. Then you're going into the cash close here. You got to buy, you got to sell, you got to buy. I mean, it could be, if you're scalping, right? If you're just looking for the next few ticks, you could be getting it right there. Then this is the evening session on the next night. This is going into the 27th. The selling area up in here. Okay, say you get stopped out on this one. I don't think you would have. That's why I draw these little buffer zones up in here above the bar. These are the areas like the danger zone, like telling me, hey, you know, if we're trading in here, be careful. If we're going to poke through it, get out. That's if you like to use manual stops, you know, stops in your head. Then you got another nice sell signal right up in here. I mean, look at that, 29, you know, 14 and a half, all the way down to, you know, 9 and a half. Then you got a nice buy here. You know, got a nice little move up. The sell doesn't work out. This buy works out nicely. You got a nice sell in here. This sell just goes sideways on you. Then you got a nice buy here. I mean, look at that. I mean, you're talking a straight up move, you know, over, you know, the next half hour where it rallies from 6.5 all the way up to 30.5, where you got the sell, then it just goes sideways on you. That would have stopped you out. Then you got a nice sell here. This buy fails. This buy fails. This buy starts to work out and just hangs around, goes sideways on you. Again, you should recognize when a trade is not working out. I mean, it's easy to see that, you know, this trade didn't work out. But when you're in a trade like this, you got to look at the signs that it's not working out. And, you know, some of the signs, obviously, you look at the delta. Obviously, you look at what the bars are doing. You know, I mean, it doesn't take a rocket scientist to say, hey, you know, I started to rally. Now all of a sudden I'm looking at a bunch of red bars. That's not a good sign. You know, I should think about getting out, especially if you got strong negative delta, which you do. You got minus 1,000, minus 1,250, you know, before it falls over. You know, then again, you got another couple sells right in here. This is the evening time on going into the 28th. Look at that. Imagine you're selling that there just around midnight. 29.23. What does it do? It sells all the way off down to your new low down here. You got a divergence and a ratio right on the low of the night of the day. At that point, you know, from 23 all the way down to 16, 17 area. The sell doesn't work out. Again, the sell, yeah, this would have stopped me out in all honesty. This one just sort of goes sideways on you. But again, you should be able to recognize what's happening. You got red candle, doji, one green and red. You got mostly selling in here, all negative delta. It's time to get out. Don't sit there, wait for it and pray that it's going to come back to you. Here, similar thing. You know, you got this, you know, if you're long, you're like, well, I'm just going to give it a little bit more time. Then you're staring at this prominent point of control, this big red, you know, this red candle with this magenta point of control is telling you, hey, you know what, this trade might not work out. And you come down in here, it would have stopped you out. Okay, then it made the move, but still recognize what's happening. You should just be happy to get out and just wait for the next trade to come along. Next trade comes along. Hopefully you could have got, a point or two out of that one. This one, same thing. It just starts going sideways. Again, if you're short, you're short here, right? All of a sudden you're looking at green candle, strong positive delta, 1400. Just get out. I mean, if you can scratch this trade, I don't think you could scratch this trade. You would have at best lost maybe a half a point. Be happy with that and just wait for the next trade. Next trade comes along. You're selling up here at the high of the day, 29.24.5. And look at that. It just keeps moving down. Maybe you cover it down in here around 22.5 or 2.5 points. Maybe you hold it. Again, I'm not saying you'd get out down here, but realistically, I probably would have been looking to get out in here. But then if you're watching the order flow and you see you got a stack selling imbalance in here, maybe you're not going to get out. Maybe you say, well, I'll just give it a little bit more time. Then you'd be hopefully rewarded. Okay, next selling opportunity comes in here. Again, the 29.20 area all the way down to 29.18 before it rallies back up to the 21. Then you get a buy in here. It just sort of goes sideways a little bit higher. You got to sell here. It makes a little bit of move down. Then it rallies back up there. So then as you come into the cash close, or sorry, the Friday's close, again, you got this little buy here, this little sell here. But again, you got to recognize what's going on, right? If you're long here, right? If you're long off this trade, and you see signs in here, stack selling imbalance, that's not a good sign if you're long, right? And you see a prominent point of control, again, you got a signal kicking off. But even if that signal wasn't there, if I'm staring at this stack selling imbalance and a prominent point of control, I'm not thinking I should still be long, right? Just as if you get short here, then you come down in here and look, you've got, a stack buying imbalance. Don't think that, it's going to fail and we're going to keep going down. You got to be watching what's happening in the order flow. I mean, that's why you use order flow. If you have a sign up here in the order flow, the turns is giving you a signal that, hey, there's price defense up in here. Market sells off a couple points. Then boom, we hit this area. This is a bullish ratio telling you a price support. And then you got stack buying imbalance in here. You got aggressive buyers, boom, boom, boom. That's a sign. What was happening here is fine. That's in the past. That's ancient history. But if you're watching it happening in real time, then you're short, and then all of a sudden you see conditions changing in the market. You're seeing a stack buying imbalance. You got the aggressive buyers coming in. You've got the bullish ratio down here. It's telling you, hey, you know what? It's time, to get out of that trade rather than wait for it to come all the way back up here and stop you out, or break even on that trade. Get out now. And then you go into the close, and that's the close for the day. All right, so that was the 4-range chart. Now let's take a look at a minute-based chart, because not everybody likes to trade on a range-based chart. Some people like to use a minute-based chart. And again, settings are the same. 1 minute. Look at this short. You got the tick there, 7.3. As I use here, short tick there, 7.3. So it's not like I'm sitting here jumping around with changes all the time. It's very similar. It's like the same. Let's go back. Make sure I got this set up. Set to 8, just so it goes back to the beginning. Now this is a 1 minute chart, so it's going to be a lot of data, but just give it a second here. Okay, so let me just go back to the beginning here. So just make sure, check the date, timestamp here, the 24th. Okay, so let's take it back to the Sunday opening from last week. So we reopened, all right, Sunday night. May have to scrunch it down a bit so it's a little easier to see. And let's just start going through it here. So, the thing is with the 1 minute chart, you get periods like this, right? I'm not a big advocate of trading on a minute-based chart. I do look at them, and but some people, that's what they swear by, and okay. I mean, I want you to see how the indicator looks on here. So the reason why I don't, necessarily care for minute-based charts so much is because you get periods of inactivity like this at certain times of the day. I like to see how the markets move around. And if you're just looking at the market trading bid against the offer, bid offer, bid offer, bid offer, bid offer for extended periods of times, it's not giving you much information to make trades off of. But we'll wait till things start picking up here. Here you got a buy signal. What happens? The market just goes sideways on you. You know, that's what happens sometimes, especially Sunday night during Asian hours. I mean, during the day session is really where things will pick up. But just actually, it starts picking up a bit during the European session, but still not so much sometimes. You know, here's a sell, it just went sideways on you. But again, you know, that's you're just trading at this time, bid against the offer, bid against the offer. Here's a little sell, sold off a little bit, not much. Here's a buy, it just went sideways on you. But you know, once 8:30 kicks in, it's a buy. Once the cash opens, then you're going to get some real activity. So you can see here now 8:30. Now bars are looking normal, right? The rest of the whole morning you're just looking at crap like this. So if you're trading on a minute-based chart, you're just better off trading it during the cash hours rather than you know, dicking around during the night session. So nothing yet. Here's a sell that didn't work. Here's a buy, just went sideways on you. Get another buy, it just went sideways on you. Here's a sell, sideways on you. Here's a buy, started, you know, is slowly grinding up. But again, you know, excuse me, drink some water. You know, for some people, they like to see, they like to trade on a minute-based chart because they know at 59 seconds, 1 second later, the bar is going to close, and they can sort of manage their trade that way. For you know, I can see that, I understand that, but I'm not a big fan of it. You know, but you know, this is a nice little trade here. Here's a nice little trade there. Here's a buy and then a sell here that fails. And then you're going into the cash close, futures close, reopen the next night. Again, it's you know, when you're trading a minute-based chart during Asia, sometimes it's really like watching paint dry, and it's extremely frustrating because you want to do something sometimes. You know, you want to be doing something, and you still see the screen flashing, especially if you're looking at a dome. You still see numbers changing. And you're thinking, oh my gosh, I gotta do something, I gotta do something. And ultimately, you do something wrong. So let's just go into the next day here. European session, you got this sell here. You can see it sold off. You know, did it sell off? Yeah, it sold off from 29, 28 and a quarter down to 7 and a quarter. Again, that's a 1 point move. I mean, it's okay. It's nothing to build your career on. But again, I want you to see how it looks on a 1 minute chart. Okay, so here you're coming into the cash open. This is probably 1 or 2 minutes before the cash open. You got a nice sell signal here. Cash opened and we sold off nicely, about 3 points. You know, before you rally back up and sell off again. The sell started to sell off and just sort of went sideways, sideways, sideways. Here's one. There's a sell that just went sideways on you. This buy failed. You know, it just didn't work out. Sell just went sideways on you. Again, you know, I find in trading, right, what you're doing is you're trading price movements. You're not trading time-based price movements, and that's why I prefer range-based charts. Here's a minute-based. Sorry, here's a buy that didn't work out right before the cash close. After the cash close, you know, buy just went sideways on you before it started rallying up like a point or two. Asian hours the next day. This is the 27th or 28th. Yeah, that's what's the 25th? So into the 26th. Let's speed it up a bit more. You know, here's a buy. Didn't do much. Did something, but not much. It's another buy. Just went sideways. There's another buy, went sideways, 8:50 in the morning. Sell, started selling off, rallied back up, got another sell signal, sold off a little bit. There's a buy, just sort of went sideways on you before putting in a little rally here. These are just stacked imbalances in here. The sell, you know, over the next couple minutes, yeah, it sold off and rallied back up. I mean, this was what are you talking here? You know, move from 11 3/4 down to 10.25. So only about 1.5 points. Again, I'm not a big fan of trading on a minute page chart, but again, a lot of people do. I'm not saying that it's right or wrong. It depends on your way of trading. I'm going to do a video later. I'm going to do on what type of trader you are. Here's one right on the European Open, or just after 1 a.m. Chicago time. It's a nice rally. Here's a sell here. We started selling off, then just went sideways on you, sold off some more. This buy just sort of went sideways before it rallied up. And here's a nice little buy here. It rallied up, came back in, and rallied up some more. Here's a nice buy right after the cash open. Cash opened over here at 8:30. This is 8:39. Next two bars, you got this nice move up from 14.5 all the way up to 18.5. Here's a nice little buy, just sort of went sideways, and pops up, and then sort of continues that move back up. Here's one, we rally up, come off a little bit, take about 2 or 3 ticks of heat before it rallies another 4 or 5 ticks. These sells just go sideways on you, and then you got a nice buy here. A nice sell here, just went sideways over 1, 2, 3, 4 bars before it started its move lower. This sell just went sideways on you. This buy just went sideways on you. This buy, you would have taken about a point loss on that. Here, next bar. These are the bars you like, where as soon as you get the signal, the next bar, boom. This buy didn't work out, just went sideways before it failed. Again, same thing here. Then the next night here, reopen. This is right on the futures close here. Then the reopen the next day is right in here. And we just move. Again, it's kind of a boring video, but I want you to see this. I want to show it to you so you can make the decision if this is a useful tool for your trading or not. Here's a nice sell right on the European Open. This buy doesn't work. This sell doesn't work. But again, depending on where you're placing your stop, you're risking, what, 4 ticks there, 4 ticks there, 1 point. This one just goes sideways on you. Hopefully you could have got something out of this trade. Maybe got, I don't know, this one, I think break even at best. This one, hopefully you could have got something out of that before it started going sideways. Then, going into the cash hours, this sell doesn't work. Just goes sideways on you. This sell doesn't work. It would have stopped you out. You got a nice little buy here. This sell doesn't work. This buy, just unfortunately went sideways. Here, you got this little move up, then just went sideways on you before it fell over. But again, if you're getting long in here at 11:31 and it's 10 minutes later, you're just going sideways, I'm not sure I'd still be looking to hold it at that point. You're looking for the move to happen over the next couple bars, not over the next, on a 1 minute chart, not over the next couple hours. Here, again, you're talking 1 minute, 2, 3, 4, 5, 6 before it starts selling off. Whereas over here, you're getting long. Yeah, it's going in your favor, but then, after 10 minutes, it hasn't moved yet. And it's just sort of hanging around, comes down, tests your entry price, just hanging around. Don't expect that it's going to make that move. Just look for the move to happen sooner rather than later. I wouldn't be getting short in here and then holding it all the way down in here. No. At the first break here is where you'd be looking to cover. Like this, I'm looking for that move over the next couple of bars, next 2 or 3 bars, for a start to make a move, not just sort of hanging around and going sideways. That's why I'm not so much a fan of minute-based charts. You're looking for, look at this, the next 1, 2, 3 bars, right? We sell off from 18.75 down to, it's down to 17 3/4 just about. And that takes us to the close. All right, so last chart I'll show you. Again, I don't want to keep this video too long, but I'm going to show you the E-mini 8 range chart. And just go back here. So this is starting on the 23rd. That was the 8 range chart. So the difference on the setting is I use long duration, but still, 7 period look back and a signal threshold of 3. Okay, you have a buy here. It starts to work out, then just go sideways. Got another buy here, so you pair up these two buys and look at that. And you can get this nice rally from 20 all the way up to 26. Nothing on this day. There's just no signals. This buy fails. This buy could have got something out of. It's 2 bars up. Third bar starting going up before it reverses. This sell, it doesn't really work out. Just sort of get the signal, then just start going lower, then going sideways. That's not a good sign if you're short. Look to cover it. Then you get this nice sell in here again from the 13 and a half area all the way down to 08. This sell starts to work out. Then you run into this prominent point of control. You got some support in there if you're reading the order flow. And then you rally back up. Eventually you get stopped out. Again, it's about understanding what's happening in the order flow. If you're short and you see information that tells you, buying is coming into the market, don't sit there and try and fight that. You cover it. And then look at this, because what you want to do, right? You want to take your loss or take your small profit or break even on the trade. Like here, you could have hopefully, scratched that trade at least and save your bullets for the next trade. The next trade comes along. Look at that. Look at this move from 29.29 all the way down to 29.19. These are the trades that's going to make your bottom line, make your P&L explode. Then you get another buy down here the next day. Look at that, from 11 all the way up. Don't really get any signs to be getting out. Even here it starts coming off, but then you run into some support in here, and you go back up into here. Yeah, I'd probably be a little worried in here. So okay, you're long from 11 and a half all the way up to 16, 17 in here. Okay, that's a nice 5-point move. Would I like to say, you'd cover it up in here? No. I'd see some signs in here, sort of got this double top in here, some bearish signs in the order flow. I would have covered. This one is very bullish bar in the order flow with all these imbalances and the bullish ratio, but still, when I'm looking at it, when it's like this, when you see that bar, it doesn't look very encouraging that it's going to keep going up at this point. It's not till the next bar comes in that sort of erases that fear, but you don't know it at that time this bar is forming. And then it rallies up. And then coming into the Friday afternoon, 2:20, you get a buy signal. It just sort of goes around sideways on you until the close. So one thing to keep in mind with this indicator is it runs on NinjaTrader 8. There's no version for NinjaTrader 7. So don't be thinking that you're going to get one. It's only for NinjaTrader 8 and version 15. If you're not on the most recent release of NinjaTrader 8, you can just go to their website and upgrade it. I give you instructions on a different video on how to get on the most recent version of NinjaTrader 8. It's free to do. So, if you think this is something that's useful in your trading, go find out more about it. Go to orderflows.com/turns.html. And I hope to see you on the inside. I'll be doing a special live group training session this Friday, October 5th at 7 p.m. Central Time for users of the software, where I'll be talking about certain different markets. I don't say certain, but different markets, different time frames, why some changes, why some settings will be changed, just as, why, like, for example, I'll talk a little bit more about the look back filter and why some I use it 2 and majority I use it on 7. And I'll be going into using the volume thresholds, which I think I haven't shown you here, but this is more for users of it, where it's going to be very important, depending on the markets that you trade. Markets like E-minis, that trades a lot of volume, it's not going to matter so much, because it just puts through a lot of volume. But if you're trading thinner markets, NASDAQ or mini Dow, it's going to make a huge difference by using a volume threshold. And I'll be talking about the volume thresholds that I use, as well as using delta. The ones I showed you here, don't use the delta. I have it unclicked there, but I'll be talking about that as well. It's all about finding better trades and more higher probability trades. So again, that presentation is going to be specific for users of the software. So if you haven't got it, go to orderflowsturns.com slash html dot orderflowsturns.com/turns orderflows.com/turns.html, and you'll see more about the software there. So thanks everyone. Have a great day. Bye bye.